Hey everyone, welcome back to the Your Money, Your Life podcast. We're at episode 289 of the pod. Before we get into it, make sure you like, subscribe, 5-star rate, and review this podcast. Subscribe on YouTube. We have some new subscribers on YouTube that are able to check out what we're doing in real time, as well as listen, of course. So make sure you do that. Just like, subscribe, 5-star rate, and review. This week, we're going to talk about a lot of things. Last week, we talked about retirement income sources, which is a popular subject, and it has been a popular subject. Today, we're going to talk about how to combat things in real time: inflation, job loss, cash flow inadequacy, things that bother a lot of people. How do we combat that in real time? I'm going to show you what we did for one of our clients, one of our community, someone that in our community that we helped combat that in real time. So you'll see that here coming up. First and foremost, let's get into our market update of the week. There was a lot to discuss here in the market. Fairly interesting things that we're going to touch on here in a second once we get all squared away with our screens. Let's get to the market and what is going on in the market update of the week. So we are getting there, folks. Hold on with me. All right. So we are now in our screen share and we're talking about, what's going on in the market currently. Let's look at the chart, our 1 week chart showing how we've done so far in the past 5 days. Past 5 days has been strong. Market's up almost 2%, 1.71%. And, majority of that is just a bullish time right now, right? Like we've said that there would be a recovery and there has been. Year to date, we're up 10%, almost 9.5%. And so again, strong times in the market. I think you're seeing a little bit of a pullback today, and we'll talk about that potentially why we're seeing a pullback today. But July's wholesale inflation numbers came in hotter than expected. So remember, wholesale is the producers and the manufacturers buying those items and the price they're paying for versus the consumer price index that shows what consumers are paying for the finished product in a lot of cases. So right now you're seeing that the S&P and NASDAQ, they did reach fresh intraday highs yesterday, and they closed at record highs on Wednesday, rising 0.3% and 0.1% respectively. The benchmarks got a jolt this week after the release of a cooler than expected consumer price inflation reports for July. So again, on the consumer side, we had a cooler than expected inflation report that stoked, investor hopes that we would probably see rate cuts and different things of that nature. However, the July's producer price index reading indicated that such a rate cut is far from guaranteed. Wholesale prices rose 0.9% on the month, more than the expected 0.2% that economists had polled by Dow Jones. The index had come in flat in June. So wholesale prices can be a leading indicator for consumer prices. The people that are making our final consumer products are paying a lot more. They're going to pass that on to the consumer. Despite the higher inflation number, Fed fund futures were pricing in about a 93% odds of a rate cut in September. So even with this wholesale price index number, the markets, the Fed fund futures were pricing in about a 93% possibility that there'll be a rate cut in September. So that's one to note. So what's leading the market right now? You have tech shares like AMD and Nvidia. They've kind of led the bull market turnaround, and they're really just kind of tech in general. Magnificent Seven, a lot of those tech firms are leading this kind of resurgence for the market. Not resurgence. I mean, the market's been doing really well the past 3-4 years. 2023 was positive. 2024 was positive. But 2025 could be positive. We're still 8 months in, but we could see that. We're positive so far. So that's what we have going on in the market wise. Again, that wholesale number did jolt the market slightly. Let's actually look back at the chart and see what we're seeing. So we're not that down heavily pre-market. Pre-market trading, we're down 0.37%, right? So not even a full percent down. And that may or may not hold when, we could see the market go green today for Thursday. We could. And so that's what's going on. The market opens here. For me, in 15 minutes, when you guys listen, it'll probably already be opened, of course. And so that's the big thing this week, again, is the wholesale. When's the Fed cut going to come? Is it going to come? There's talk by the administration to replace Jerome Powell with someone else as the Fed chair. When does that happen? How does that affect Fed policy? Those are questions that the investors are going to have to answer for themselves, and it will be shown through the market activity. So that's a big, big thing. So we'll move on from that. Bullish. I actually hadn't heard much about this company, but I'm curious on it. Bullish is a cryptocurrency exchange. It surged 84% from its initial public offering on Wednesday, raising 1.1 billion in its public debut and making two of its founders billionaires. The IPO priced at 37 per share and climbed as high as 118 before closing at 68, giving the company a market value of roughly 10 billion. Bullish joins a number of other firms mulling over IPOs in a newly crypto-friendly regulatory environment. So, crypto firm that went on the market publicly and raised, what they say, they raised 1 billion, made two of their founders billionaires, and they have a market value roughly of 10 billion. So again, crypto, again, we've been proponent of it for a long time, telling keep it, hold it. We haven't talked about it, even though, because I think the sentiment from a lot of consumers and retail traders and investors is that they're just like stepped away. We never stepped away. We always said hold it, buy little bits, have part of your portfolio, just keep holding. That's what I've done personally. That's what we did for clients until that exchange or that area we're using went a different direction. And they shut down that business for advisors, but we were doing this for clients. And we were telling them to keep holding, just keep your shares. Now we're at market highs, record highs for crypto and Bitcoin and Ethereum, and those are one of our proponents that we said always just hold. And so another exchange doing well. It's a really strong regulatory environment for crypto. Obviously, the administration is really a proponent of crypto, even if you got to be scared of bad actors, right? Celebrities or different people pushing things that aren't part of the core tenets. That's when it gets a little bit scary. So you want to keep your eyes on that. This isn't finance related, but I found it interesting because I saw it in two different places. But U.S. alcohol drinking hits a record low. We're a long way from the three martini lunch. The number of Americans who drink alcohol is down to 54%. This is according to a new Gallup poll. This is the lowest since the organization began tracking drinking behavior in 1939. When was prohibition? I don't even know. And those who still consume alcohol are drinking less frequently, as scientific consensus shifts away from the belief that moderate drinking has health benefits. A record 53% of Americans, particularly young adults, now say it's harmful compared with just 28% a decade ago. That's quite interesting. So we're now seeing a shift away from alcohol. And you can talk to like people in the fitness community, all these things. They talk about how it doesn't have much, but if you talk to someone that's really, really fit, they always say they just don't drink alcohol. That's kind of interesting to me because they know they've really researched and understand the harmful effects on the body, so they don't drink it. Understood. I'll have a drink every once in a while, during the couple of times during the week, but I understand that. I've gone plenty of times of not drinking, months just because we were doing a fitness thing. And so I understand the effects. And I think this is interesting to show that younger people are now saying, all right, we don't want to drink. We're going to do other stuff. We're gaming, we're streaming, but we just don't drink. They're already on like a natural vibe. All right. They're on a natural vibe, natural aura. But a lot of young adults are turning away from it. I understand. I wonder how that's going to affect beverage companies, alcohol companies, all the likes, because it used to be part of culture. And if it's not a part of culture anymore, what does that mean for these companies? Because if kids are shifting to something else, they're the ones. Remember, like how think about tobacco and smoking, how that used to be a part of culture. Now it's like if I see someone smoking, I'm like, what? It's like seeing an alien. It's like, what is that person doing? So will that happen to alcohol? I highly doubt it. But it will. It has shifted, and it probably will. That trend will probably continue to go on. New York Attorney General Letitia James has sued Zell's owner, alleging that the payments provider knowingly launched its platform with security lapses that made its users more susceptible to scams. The lawsuit asserts that early warning services was aware of these critical safety flaws, but forged ahead anyway in an effort to compete with Venmo and Cash App. Zell's spokesperson called it a political stunt and a copycat of earlier claims by the Consumer Financial Protection Bureau, which were dropped in March amid a broader rollback of oversight regulations. So I guess New York's Attorney General is going after Zell, saying that the platform had security lapse, but they still launched anyways or went ahead anyways, despite the lapse in the wordings that they had from the security teams of these lapse. That's quite interesting. I've had no issues with Zell, but I wonder if you guys have had any issues with any of the payment providers out there. Obviously, you have to be careful. I mean, it's kind of interesting because it's like you just use a phone number or a cell phone, and it's like, oh, hey, just plug that in, and the money gets there. And that's how technology works. But Zelle was particularly easy. Like even with Cash App and Venmo, you had to link a bank and had to do all these different things. I guess Zelle was a conglomeration of the banks, so they had all the information anyways. But Still, it sounds like they weren't doing everything up to par. But I'd had no issues with it. I wonder if you guys have out there. But I'm interested in the story to see if there's anything comes from it. But it doesn't look like there will be much. But we'll keep an eye on it anyways. Calls rise for a jumbo rate cut. So we were just talking about this earlier in the wholesale producer report. The latest inflation report is fueling bets that the Federal Reserve will cut interest rates by 25 points next month, 25 basis points. So those who don't remember, no, basis points are just 25 basis points, just 0.25%, less than a percent, obviously less than half a percent. And some investors are eyeing the potential for a larger move, calling for an outsized rate cut increase after Treasury Scott Bessent told Bloomberg that the central bank should begin an easing cycle with 50 basis point rate cut in September. However, some economists are pushing back. So the administration wants the Federal Reserve to cut rates harder and faster. And the Federal Reserve and the chair people, they're, if Jerome Powell, they're like, hey, we will just, if we do rate cut, it'll be a 25 basis point, our minimum that we do. We're going to take this slow. We're going to watch how the market reacts, watch how the economy reacts before we do anything more. But Bessent, the administration, they're like, hey, just cut rates now, fuel growth, fuel everything. Doesn't matter if inflation, we're past inflation, just feel it. So I don't know if that's true. I don't know if we're past inflation yet. We're going to talk about that in our roundtable, how to combat inflation, how to combat job loss and things that are going. Because under the surface, there are things brewing. Um, and we want to make sure, they want to make sure that that's covered before they just start, cutting rates at an outsized amount, which will fuel growth. If rates are cut, it makes borrowing easier, makes spending easier for people because they can borrow easier. And it affects inflation because if people start buying again because they're able to get access to more credit at a faster pace at a lower rate, then mortgages, a lower rate, mortgages potentially things easier, car payments, lower rates in your car payment, then people buy more, than inflation hits again. So we'll see how they approach it. That's going to be really, really interesting in September. We're going to see that. NBA's Blazers are going to be sold for 4.2 billion. I saw the story yesterday. Interest in the NBA and WNBA is booming. An investor group led by billionaire Carolina Hurricanes owner Tom Dundon has reached an agreement to acquire the Portland Trailblazers from Paul Allen's estate for roughly 4.2 billion. This is from The Athletic. Meanwhile, the NBA's Board of Governors also unanimously approved a 6.1 billion bid led by private equity exec Bill Chisholm to buy the Boston Celtics. So he's seen teams change hands because a lot of this is because private equity money can now be in these teams. The threshold for different leagues is different. So like NBA and has different threshold. The NFL has a low threshold for private equity. They don't let as much. They don't let you, like you can't be a majority owner in private equity. It's still family-owned billionaire businesses. But I think NBA has a higher, like they allow more, lower threshold. And why NBA, for them, they allow more private equity money in. And so you're seeing that. The Blazers now are being sold. They're seeing teams change hands and ownership change just because there's a lot of activity, a lot of money to be made. Talking about 4.2 billion for the Portland Trail Blazers. When have you guys lost a Portland Trailblazer game? I couldn't name one player on the Blazers. That's not trying to be rude. Like who plays for the Blazers now? I think did Damian Lillard go back to the Blazers? Right? That sounds right. Well, let's keep going. That's an interesting story, but let's keep going. Home ownership crisis in the U.S. So we're going to be talking about a lot of these things. Unaffordable homes threaten to reorder American society. This is from Bloomberg. Prices have skyrocketed, dragging sales to near record lows. The annual income needed to afford a median mortgage has jumped 60% since 2021 to more than 125,000, while above the nation's 80,000 median income. Renting is now cheaper than owning in 49 of the 50 largest U.S. metro areas. The economic repercussions could be significant, and Americans who can't afford to buy a home have fewer chances to build wealth for themselves and for the future generations. So Bloomberg did a report showing that it's just much harder to buy and own a home based on inflation, based on income, and it's an interesting report. And I do see you do see that like if you follow in social media, you see people discussing this, particularly young people discussing this online and the effects it has on them mentally, psychologically, what they're trying to do for their life, for their family, for their future. So that's such an interesting report. So what we want to do now is really talk about that in a broader sense. because I think it's so crucial to discuss, is how to combat what's going on economically. I do think economically things are good for some people, but now I do think there's a subset of younger people, particularly that are having hard times because it's harder to find jobs, right? Like there's AI, different things that's making it harder to find jobs. Even doing resumes and doing all that stuff, it's really much harder. Two, you do have inflation that's, even though it's cooling, right? Like the rate at which inflation is growing has gotten better. Compounded effect of the hot inflation over the last several years means prices have elevated at a substantial rate and they're not coming down. They're just not now going up as fast, right? And so that still has an effect. So if someone didn't change jobs or get a, new job or a big promotion that's, well at above 20, 30%, they actually are behind because inflation has risen over the last several years, 20 to 30% compounded. If you had 8 or 9% over year for a lot of times, you compound that over a few years, you are up into double digits, well over double digits of compounded inflation and price increase for the average consumer. And so, how do you combat that? How do you see, I saw it, it really touched me because I wanted to talk about, I saw these things on social media as far as people saying, hey, they've even tried to apply for jobs. They tried to do this, or they lost a job, or things are just expensive. They're trying to do X, Y, Z, and if they just realize, man, is it even possible? Like my parents, boomers had it much easier. Their houses were like 200,000 or whatever it was, you know. Um, so how do you get through that? I think there's a few things to do. One and first and foremost, you have to have cash flow. And I know it's easier said than done, but you do have to have a job. You have to have something, whether it's you make your own money, be a business. It's easier than ever to be a sole proprietor now. It's easier than ever to be in your home and have a virtual business and make tons of money. It's easier than ever to start something, sell something, provide a service or product online. You can't tell me that even a child, there's a kids doing it. Like it's very easier than ever to have a online business. And you don't need to scale and hire a bunch of employees. It's super easy to do it on your own with AI, with all these tools, or depending on what your business is, and scale without hiring a bunch of people and keeping your overhead low. I know, speaking from experience, speaking from people I know that do it, very easy. Now, the next thing is you have to have that. That's the hardest thing, right? And you have to keep it and you have to keep it consistent. If you have a W-2, keep your W-2 or find a W-2. That's the hardest another thing to do, but you have to do that. And that's going to be hard. Nothing worth doing is easy, but you have to. Next thing will be saving. We've always talked about that. And people maybe thought I was, not crazy. I mean, we've been doing this for what, 4 or 5 years as far as the podcast. New Street Advisors Group started in 2019. And I've said this, I've been consistent on saving, investing for all those times you've heard this podcast, all those times you've seen or heard me on TV, on YouTube, whatever, on the podcast. So that's consistent. That needs to be done. Because again, without that, you won't be able to do any of the things that you want to do. If you're not saving, investing, you will not be able to purchase a house. Even if you think it's a long shot, it'll be even a longer long shot. You will not at some point be able to retire because there'll be no money to pull from to fund retirement. So those things are important. Having experts making smart moves. That's another thing. Um, it's super helpful. And I will show something now because this is really important. I don't do testimonials often, but these ones were important, were important to do, and needed to be shared. And so I will share these. They're important. They need to be shared. And it was something that came across my desk, and I had to share that with folks because I think, seeing is believing. So here's a testimony that we got last week. Someone that, been a client for good several years. And it says, lots of change here. I'm so much better health after a long health battle, ready to get back at it and looking to buy a house by the end of the year. Once I'm settled, I will reach out and get deposits going again. I'm so thankful that we started this back when we did. Is how I've been able to take care of living expenses while I haven't been able to work. I appreciate you and all that you do. So for more context, again, this individual, we asked if we could share some of this without identifiers. And they said yes, they were happy to because they were so happy about what we did to set up saving, investing in retirement accounts and individual accounts a long time ago that they were able to use to float themselves while unemployed, so that they weren't homeless is literally what was going on through what our initiative by reaching out and setting this up for this client, and having them save and having them properly invested to grow for a while and then be able to use these funds in a time of need. That's what we did. And it's so crucial that people see this and understand that that's why this is here. And that's what we're talking about in times of, when things are hard for all the people across the world that are seeing this, you should have or could have this set up, so that things are a lot better. Here's the second part of the testimonial. Absolutely. We asked, oh, okay, this is unsolicited. And I was like, oh, okay, well, can we share this? And like, absolutely, please do share. From the beginning, you've taken the time to explain to me anything I've asked about, which we've always done. You're super responsive and helpful. Not to mention, I've never learned how to manage money growing up. So that's a lot of people's situation. The last year, I would have been homeless with all this help. And the best part is I saved myself. That's 100% right. We're telling people to save your own money, to invest your own money with through us, like to do the things, but it's your funds, it's your account. If you don't want to take initiative in your life, I can't do that. Like, I know there's many people that are in different situations, but we want to help people that want to be helped and are asking for help. Continuing, that is the first and an amazing feeling for me. Thanks again. And I look forward to the contributing side again soon. So that's a great way to sum this up, right, folks? Because again, we tell people save when you can, invest when you can, but we don't say you're not doing it. It's horrible. But we understand things in life will change, but we want to help people. And that's why this was super, super important to share this morning for people. Um, Man, this is a great podcast. It felt great disseminating this information to people and telling people about this stuff because I think we're really in a shifting moment for the world and for people out there. What we're going to do though is I'm also going to be better at social media posting. I'll probably doing some more videos, TikTok, IG things, so you could see a little bit about what we're doing behind the scenes and how we're growing, for people, growing, New Street community. That's what we've always been since 2019, ladies and gentlemen. We've grown substantially. So make sure you like, subscribe, 5-star rating, review, tell your families and friends. We do a 50% referral bonus for financial planning. If people come on and we can help them, tell your family and friends, we'll get them help. We'll talk next week.